Today, I've decided to search for you what are the 3 best stocks that you can buy right now in November 2022, and here are my results. But first, to pick the different stocks that will be present in this video, I've watched at what are the current momentum of the companies, but I've also took a look at what is their business model, and also I've made a quick fundamental analysis on each and every single one of these companies. So now, let's take a look at my pick number 1. The first company that I'm keeping a close eye on for November 2022 is Meta with the ticker FB. This first company that was previously known as Facebook was created years ago by the famous Mark Zuckerberg, and at that time this social media was only used by the Harvard students. And nowadays Meta has become the most popular social media in the entire world with more than 3 billion of active users per month. And what is even crazier is that this company also owns many different other subsidiaries with companies like Instagram, WhatsApp, and Messenger, which are all in the top 10 of the largest social media in terms of users. And with their massive market capitalization of more than $200 billion, Meta has also been mainly focusing these past couple of years on what is called the METAVERSE. This new METAVERSE is considered as a brand new revolution, just like the internet was more than 20 years ago. The metaverse is basically a universal and immersive virtual world that is facilitated by the use of virtual reality and augmented reality headsets. All of this with the objective to connect more people together with some massive immersive world that would be available for everyone. This is why Meta also owns other companies like Oculus, which is a virtual reality simulator. However, as a good social media company, Meta is making the most and the biggest part of their revenue from their advertisement income, and obviously most of them are coming from their website and their mobile applications. However, Meta has still been able in the last couple of years to generate some interesting income from their different VR accessories. Indeed, since 2020 they have reportedly sold more than 15 million of VR headsets that are called the Quest 2 by Oculus. If we estimate the price of these accessories of about $500 per headset, this would make a grand total of more than $7.5 billion of revenue from it. Not too bad for something that has been on the market for only 2 years. Well, in that case, why does this stock is down more than 70% since the beginning of the year? There are actually many reasons that could explain this, but the one that has affected them most recently has been the terrible earnings that they have reported. In fact, even if they have been able to beat the prediction in terms of revenue, they have still massively missed the earnings in terms of earnings per share, which has had the impact to make them lost more than 20% of their value in only one day. But the thing that could be the most threatening for this kind of company is the loss of faith from the different investors. And those investors have lost a lot of their faith in that company mainly because of the different confidential problems. In fact, many people consider that this company is using all the different data from their consumers to spy them. And personally, I believe that this kind of investment is a high risk, high reward play. It is possible for this company to go to bankruptcy eventually, which means that you would lose all your money. But if the metaverse is really something that will blow up the internet and that will blow up the world, well, it is also possible that this company will make a ton of money in the near future. And knowing that they are owning a massive part of the different social medias in the world, it means that this company still has some great different income sources. In terms of valuation, we can see that this company worth a massive $263 billion at the moment, with a great price to earnings ratio of less than 10, which means that it is more undervalued than the average of the tech industry. We also see that they have some great profit and operating margin of less than 20%, with also some great return on assets and equity. In the last 12 months, we can see that their revenue has been of around $118 billion, but in the last quarter, we've seen that year over year, it has reduced of about 5%, and compared to the last year, as we saw with the earnings, they have reduced their quarterly earnings growth of about 52%. In terms of cash, however, we can see that this company has a lot of cash compared to what is its debt, but we can see that their beta is higher compared to the market, meaning that it is a more risky peak compared to the average market, as we can see with its massive downtrend since the beginning of the year of less than 70% compared to about less 16% for the market. And in terms of cash flow, we can see that this company have been able to increase their operating cash flow since 3 years. Unfortunately, their financing cash flow have also massively increased, which means that their free cash flow at the end have also diminished. The second stock on my list for the best stocks to buy in November 2022 is Adobe with the ticker ADB. With a market cap of over $100 billion, it is currently one of the largest computer software companies in the entire world. In the past, this business has mainly focused in the creation of multimedia and creation software products. For example, you have Adobe Premiere Pro, Adobe Cloud, and Adobe Photoshop. In 2021, those have all helped this company to generate more than $15 billion of revenue. During the last quarter of 2022, the branch that has generated the highest revenue was the subscription branch with more than $4 billion of revenue. And in total, this represents more than 93% of their quarterly revenue. And this is because Adobe is mainly selling some different subscription to their users, for example, for Photoshop and Premiere Pro. However, they have still been able to generate more than $126 million in the last quarter from their different products and $179 million from their services. But what is really interesting about this company at the moment is that they have recently announced a brand new partnership with the US Bank. The goal of this is to enhance the personalization of their customer services. And this company, just like a lot of different companies on the American market, has lost a lot of value since the beginning of the year. And this could be a little bit explained by the acquisition of a competitor in the creative software products, which is named Figma, for about $20 billion. And this is normal that they have lost a lot of value from this acquisition, because usually the investors are seeing that with a bad eye, because they basically need to use a certain amount of money, so about $20 billion of cash, to buy and purchase this company. However, with their recent partnership, we can see that in the last couple of weeks, they have been on a pretty good momentum. And knowing that the digital design sector has exploded in the last years, and that is also predicted to explode in the next couple of years, this kind of stock is definitely one that you should keep an eye on. In terms of valuation, as I told you earlier, this company has a massive market cap of over $150 billion, add with a great and a fair P ratio of about 30, which is still pretty higher compared to the Meta P ratio. However, compared to the average of the industry, it is pretty fair. Adobe also has a great profit and operating margin of close to 30% with an excellent return on equity. Since 12 months, we can see that this company has been able to generate about $17 billion, and in the last quarter of 2022, it has increased year over year of about 12% their quarterly revenue. As I told you, with the acquisition of Figma, this company doesn't really have a lot of cash at the moment, only about $5 billion, but they don't have a lot of debt as well, only about $4 billion. Just like Meta, this company is also more risky compared to the market with a beta of 1.23, and since the beginning of the year, we can see that they have lost about half of their total valuation. And since 3 years, we can see that they have been able to increase pretty well their operating cash flow, which has had a positive impact on their free cash flow that has also been growing since 3 years. And for my last pick, I've chose a company that is slightly smaller compared to the first companies that I've presented to you today, and it is also a company that has seen some pretty good momentum compared to the overall market since the beginning of the year, and it is the company Palo Alto with the ticker PANW. This is one of the largest and the most important cybersecurity companies in the entire world, which is also offering many different kind of products, notably some different firewall and cloud-based program, always with the aspect to keep the security as their main objective. This company is an expert in more than 11 different categories of the cybersecurity industry, with 3 big specialties, which are the security operations, the network security, and the cloud security. And as you might probably know, companies like Google and Apple are using a lot of different cloud properties, which, as you might understand, those big companies have recently rushed to buy the different Palo Alto products because of the cyber risk that has recently increased a lot. All of this can be reflected in the 25% of increase year over year in their customer base, which has also generated a 29% increase of their last year return. Plus, compared to the Nasdaq that has been down of close to 30% since the beginning of the year, this company on its side has been down of only about 10% since the beginning of the year. So with the cybersecurity being one of the most important aspects for the next decade, this could definitely be one of the best companies to take a look at the moment. In terms of valuation, this company worth about $50 billion at the moment. And unfortunately, because of the lack of historic, we don't have the price to earnings ratio at the moment. And since it is still a small company compared to the two other ones, we don't have some great profit and operating margin, as well as an horrendous return on equity in the last 12 months. But what is really interesting about this kind of company is the revenue evolution that is currently about $5 billion. And in the last quarter, year over year, it has been a growth of about 27% in their quarterly revenue. But unfortunately, we don't have the quarterly earnings growth. A good thing about this company is that even if it is a small company, it still has a lot of cash compared to what is its debt. But as you can see, once again, this stock is fluctuating more compared to the market. But since the beginning of the year, it has been one of the few stocks that has been positive, about 1% of increase. And finally, for the cash flow of the company, we can see that the cash flow from operation has been increasing since 3 years, which has been reflected positively once again in the free cash flow that have also been increasing. As you've been able to see in this video, there are plenty of different stocks that I'm taking a look at to buy in November 2022. Mainly some different tech stocks that I've seen some massive downtrend since the beginning of the year. Keep in mind that those kind of stocks have a lot of risk but also have a lot of potential of growth. But if you're someone that doesn't like to take too much risk, the ETFs could be a great alternative for you. And to see what are the best ETFs that you can buy right now, check out the video that's going to be right over here. And for everyone that is new, make sure to join the North family by subscribing to the channel for only $0.0, and I will see you soon. Peace!